Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York, roughly 20 minutes after equities markets have just closed. Precious metals trading lower on the day. First to gold off approximately $6 on the day, 1148 and change is our current print on the screen. 1142.60, that's our low. 1158.10 is our high. As I said, currently trading off about $6 on the day. Silver is also trading lower on the day. It is trading off about 9 cents, currently trading at approximately 1156, 1155 in that area. The low 1537. The high 1570, and 1556 current print in silver. More on silver in a little bit. Interesting day in the markets. You know that in the Dow Jones Industrial, they have had triple-digit moves now for the last consecutive 9 days in a row, both up and down, and I find that extremely interesting. Some economic news that came out today, not very favorable. It did push the equities markets down. Oil continues to drop. Dollar softened a little, and to the metals absolutely softening. We're continuing along down this path as we see this market meander through some pretty critical areas. The next real area that it would have to test would be this record low, and I say record low because we haven't seen this market at this price point except this point right here and on the rise up back in 2008, 2009. We haven't seen the markets trading this low because when it hit recent lows, those lows were around 1160. So this is a new area. Now, the big 800-pound gorilla in the room, so to speak, is the fact that FOMC meeting began today. We'll conclude tomorrow. Minutes will come out, and depending on what is said, and they're looking at whether or not the word patience is in there. What is the tone of Janet Yellen? But they're really putting a lot of weight on this one particular word. Anything could happen. Traders, anything could happen. I'm not privileged to what's in the minds of the feds, and I don't think anybody else is. It's all speculation. So for that reason, we are probably going to lower our stops. I'm going to make that recommendation, and we'll send that out in a trade alert. The trade alert is going to go out with this particular report. And let me show you what I'm looking at right now. When we take a look at the high today, that was around 1159.77. So call it 1160. Now we're in at 56. And we have a little bit of profits in the market right now that it's trading at 49. My fear right now, my concern, I should say, not fear, but concern, is that you tend to get these wild swings in the market on FOMC minute release days. We've seen it go up $25 and then down $25 all in a few minutes. So there's a couple of strategies we can take. We can either A, take the money and run, meaning just pull profits here. B, we can trail our stop down. Or C, we can simply wait to see what happens. And traders, that decision is really going to be contingent upon your risk appetite, not mine. In other words, there's different approaches. I'm going to give you the strategies for all of them as I just done, but it's really your decision in terms of your risk parameters that you're comfortable with, because there are many traders out there that wait for these huge swings in the market and hope to capture them, willing to risk it. Some that really want to take a more conservative approach. In any case, we will be trailing our stops down. I will make a recommendation to that. That will go out in a trade alert. That trade alert will be part and parcel of this report that goes out today. So traders, in terms of the other markets that we watch, as I said, the dollar did soften today. You can see it's still trading though above 100. It's at 100.04, so just above that. On our weekly chart, this being Tuesday, you can see these last 2 days have come off of these highs that it hit as it approached 101. Interestingly enough, we have seen this happen before as this market has been swinging up, and really what we've seen is a long protracted move up, very, very shallow consolidation, protracted move up. I'm not really going to count this one down day here, but these are weeks, this one down week, but then shallow Again, correction taking approximately 1 month, 3 weeks to a month here. And so now, as we look at this market here, it would not surprise me whatsoever and be in alignment to see the market just kind of take a breather again, maybe hit as low as 99, maybe even 98.50, and then start to trail back up. I still think overall the dollar definitely has some room to the upside, but what you do want to account for is any market moving up to the upside is going to have times in which you get these small breathers in the market, consolidation periods. So it would not surprise me whatsoever to see that happen here in the dollar. Take a look at what we see in the crude market. This is our monthly chart on a weekly basis. Markets closed lower today, but even on a weekly basis, you'll see that. You can see the real hard break. Let me update this data on our weekly chart. It shouldn't take that long. But what you'll see is that we've now dropped down near really $43 a barrel. We'll go back to monthly since that's taking a little bit of time, but you can see how the market is just fallen out of bed. Here we are, middle of the month, and we have lost another $7 per barrel. The bottom line is production is huge in the United States. When you take production and you put it together with supply, the net result is lower prices, and I believe we'll continue to see that trend. So traders, when we look at the equities markets, again, as I said, double digits for the last consecutive 9 days. On the week we are trading up, on the day we are trading lower. But as I think you can clearly see, and I've just added a couple of channel lines to this market, even with this extreme volatility, looking at this market since 2012, you cannot make any case except for the fact that it has been in a defined upward channel. And even with these corrections that come into play, these corrections are small, they're shallow, and they continue to be supportive of the market. And therefore, I see this market continuing to rise higher unless it breaks below this lower channel. On a technical basis, I see a lot of bullish days ahead. Not consecutive, mind you. I see a lot of volatility, but I think we will see higher equities prices. And traders, lastly, to look at silver. Silver is trading lower today, but it is still absolutely trading within let's go ahead and blow these up. But within the range that we have identified, really about 1630 on the upside, on the low side, about 1510. And that's the range. Even though it's been breaking down, I really think that it needs to break out of this range before we get a really strong indication. When I'm looking at this range, I mean to the upside. I think that it's going to head to 1510. Personally, I think that we're going to see lower prices, and depending on whether the market comes here and bounces off of it or breaks through, will determine really the next logical area that we'll see silver go to. But I still think that we'll see pressure in silver just as we see pressure in gold, lower pricing in both of those precious metals. That's my take on it anyways. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the daily update and review, and tomorrow could be a most interesting day.